In this presentation, we will add a bank account and we'll enter the beginning balance related to that bank account. Get ready to start pushing forward with Sage 50 Cloud Accounting. Here we are in our Sage 50 Get Great Guitars file. We're currently in the vendors and purchases section. Our objective now, if I go on down to our beginning balances, is to add the bank account. So if we go up to our beginning balances, we already have $25,000 in the bank account. You can see it was labeled last time basically just a checking account. We put the last 4 digits of the account number on it. And so we want to see what we have in our current system. Now, our objective is, of course, not to add any new accounts unless necessary. So the first thing we want to do is take a look at our general ledger account, see if we already have a checking account set up, and if we do, whether or not we want to modify it, and then think about how to put that beginning balance into that system. So to do that, let's go to our lists drop down up top. We're going to go on down to our chart of accounts. Let's take a look at our chart of accounts. And at the top of the chart of accounts, usually at the top is where the checking account is, because it's an asset account. And it is a very liquid asset account, it being the checking account. So we have the checking account right here. Now, if we wanted to change it, like if I wanted to put a specific checking account, I could do so here. I wouldn't make a new account. I would just basically modify this one if I wanted to. There's 2 things you want to think about with modifying something like a checking account. One is, the 2 types of reports that you're going to have is, one, you have internal reports. You're going to be jumping back and forth to, say, a trial balance, balance sheet, income statement as you enter data. And for that, you want an account that you can easily recognize. So if you have multiple checking accounts, you want to be able to recognize it. And then you have the external reports that you're going to be providing to others. And for that, you might want to group some of the accounts together, like all the cash accounts together into one account called cash or something like that. So for internal purposes, I might want something here like a name of the bank, or say this is the primary checking account, or even the checking account number on it if I have multiple checking accounts. For external purposes, I want to probably remove anything like that so that I can provide it. The way you would do that is to customize the reports. So what I suggest doing is making your chart of accounts something that you can work with and jump back and forth from the balance sheet or trial balance to your data input, and then work on customizing the reports to kind of to remove any of that thing, like to group the cash together and whatnot, so that you don't have the account numbers. Now, we're not going to get into a lot of information on the data input, but just for an example, if we wanted to adjust this account, I could say, yeah, there's the checking account. I just want to tweak it. I don't want to make a new account. I just kind of want to adjust it. I want to put a different name on it possibly. So maybe I call it the checking account, and maybe I put like the last 4 digits of the account numbers, because if I have multiple checking account numbers, maybe I do that, and that will allow me to, when I go over to the checking account, to be able to quickly distinguish the different checking accounts. Now note they also have a field here which says account beginning balances. So they allow us to do the beginning balances at this point in time in the data input process. You only want to do this when you first start up the company. You don't really want to be using the beginning balances pretty much like ever again after that typically. But when you first start the thing out, you might say, okay, here's the beginning balances. You have modified the current record and have not saved it. So we should save it. I'm going to say yes, save it please as we go. And so I save that, and then we're going into it. So then we're going to say that select a period to enter your year adjustment. So I'm going to enter it and see if they allow me to enter it at the end of 2019, right? So I'm going to enter it, and that means that any adjustment they make, if they put the other side to the income statement, it'll roll forward because our cutoff is 2020. So we're going to be started in January 2020. So we want any of our beginning balances to be prior to that point. So I'm going to say, okay, 1237.19, and then the cash on hand, we're going to say is that 25,000. So here's the 25,000 in the cash. So I'm going to say 25,000 in the cash. So I'll keep that as is, and I'm going to see if it allows me to enter that information in. Notice we have all the beginning balance here. I'm going to go ahead and see if we can say okay with that, and says the trial balance must be a 0 to save beginning balances. If you press OK, Sage will adjust your trial balance by creating an account called beginning balance equity with a balance of 25,000 in it. So notice what it's doing. It's saying, hey, look, you're recording 1/2 of it, so we'll record that for you, but then we'll put the other side into the beginning balance of a new account called opening balance equity. And this is similar to the way QuickBooks does this if you're used to that. Now, that's fine. It could do that, or I can go through here and enter all the beginning balances in this kind of beginning balance worksheet. but I'd rather enter it with a journal entry, so then I can put it straight where I want to in the equity account. So I'm going to close this back out. You could use this field, and again, it kind of works like the QuickBooks, but I think we might be better off just entering the journal entries as we've been doing at one at a time. So you could use this. You could put the other side and put it into retained earnings possibly. So right, if I went down here and I said the other side is going to go into the equity, into retained earnings, and keep doing that. But I would, and the other option you could be using is to enter all the other information that we have been doing and then go back in here and do the beginning balance like in one giant journal entry type of thing. Or you could just enter a journal entry, right? I almost think the journal entry is easier than this worksheet. So in any case, I'm going to close this back out. And I'm going to close it, and I'm going to say, you have modified the current roster. Do you want to save it? I'm going to say no. So that's one method we could use. I'm not going to use that method. I'm going to save this. So we have this set up. I'm going to close this back out. So at this point, we have our checking account here. We've got the number on it. We don't have anything in the checking account now. So now we can enter the beginning balance. And we could do that with a couple different ways because it's the checking account. So we could have a register or a journal entry. So we would probably be going with a journal entry because that's what we've been doing for all the beginning balances. And I think it would be good to be consistent with that because that's something you can recognize if you go back into it. You say, okay, this is a beginning balance journal entry that we entered. But if I go back over to our beginning page here, our home page, and I go into the banking section, just also realize you could enter the beginning balances or a transaction with the use of a register. So you could go to the account register here, and here's our account register. Nothing's in it at this point in time. So we could put, the date and the type, the reference, the payee, and then the other side, the general ledger, which would be retained earnings type of account. And we can enter it in that fashion as well. So I'm going to close this back out, but I'm going to be consistent and keep what we've been doing with our beginning balances so that it'll be consistent, which is going to be a journal entry. So I'm going to go to the tasks drop down. I'm going to go to the journal entry, and then I'm going to maximize the screen here. We're going to make this as of 01/01/20, January. And we're going to be putting this into our checking account, of course. That's the one we're working on here, is the old checking account. So we'll open up the old checking account, and this is going to be for our beginning balance was, if I look at our beginning balances over here, $25,000. So we'll put that in here, 25000, and we're going to be crediting then the retained earnings. Everything else is going to be going to the retained earnings account. So I'm going to find that one by going down here, and there it is, the retained earnings, and 25,000. And I should be putting the description which we said was the beginning balance. And then down here we should do the same thing, beginning balance. All right, so there it is. And now also note that when I enter this beginning balance into the system, we're entering that as of this point in time. So there could be outstanding items that are included in here that haven't cleared the bank yet. So just realize that we're going to have to deal with that with the bank reconciliation. You may still have some difficulties or some kind of issues you have to deal with those outstanding items that are included in this number, such as checks we wrote that didn't clear the bank and deposits we wrote that didn't clear the bank, that are going to be part of that reconciling item when we do that first bank rec. So the first bank rec is often another kind of difficulty with regards to the cash. So just realize that. But in any case, I'm going to save this out, and we'll take a look at the bank reconciliations later. So we will look at bank reconciliations and discuss that a bit further after we enter the 2 months of data into our system. So I'm going to close this back out, and then let's take a look at those financial statements. So we're going to go to the reports drop down. We're going to go on down to the financials. And then let's go into the balance sheet. So into that balance sheet, and I'm going to bring this on back to the range of January because I want to see it, because that's where I want to see it. And then I'm going to say OK, and there it is. So there we have the checking account. If we were to double click on the checking account, there we have our journal entry. If we're going to double click on the journal entry, then our journal entry shows up. So then I'm going to close this back out, the other side, of course, going down to our retained earnings. So opening up retained earnings, you can see we have all this activity there now. We're just kind of dumping the other side into retained earnings. And therefore, once we get everything up to date, that's our strategy. Once we get all the accounts up to date, the other side is going to be dumped into retained earnings. And the retained earnings then will match what we have here. Has to work. I was going to say hopefully, but no. It's an absolute, because that's how the thing's going to work. So that's going to be it for now. We will be backing up this information, so you have the backup file. We'll also print the trial balance so you can kind of check your numbers from a trial balance perspective each time we remember to do so. So that's going to be it for now. Let's get out of here.